Hi there, it's Bill with Smart Trades, and it's 9:35 on Friday morning. That's Pacific time. It's October 1st, 2010, and interestingly enough, I'm looking back on 1987. Perhaps it's a little nostalgia on my part, but I was younger then. So, at any rate, just very quickly, I'd like to point out that back in '87, the Dow's secondary peak was actually on October 2nd. That was a Friday. So, the we are still pretty much following that pattern. The perfect fractal that I had noted before, I think that's gone. But nonetheless, the overall pattern of the current market relative to 1987 is still very, very similar. So, I'm comparing the daily Dow of 1987 to the weekly Dow of the current market. Now, obviously, the initial peak for the current market is back in April as compared to the August peak in 87. But otherwise, here, take a look for yourself and see how the pattern off the April high to the current price resembles that 87 market. Again, that's October 2nd, a Friday. Obviously, it's October 1st, also a Friday today. So, are we going to make one more new high? Possibly, or did we peak yesterday? I'm not exactly sure. I'll get to that in a moment. But first, the bigger picture in terms of the Dow, and later on, I've noted the S&P before, and I'll note it again. But basically, a rough target of A equals C, which is the most likely scenario, assuming that this indeed is an ABC correction off of the April peak, would be about 93.60, 93.50, somewhere in there. 1.62 extension of wave A would take us down closer to about 83.60. I post this just to sort of have a picture of what might be in store, and to keep in mind that in terms of the bigger picture, I do think the potential for the next move is down, and it's going to be substantially down, in my opinion. That said, we need to start getting lower first before we confirm that indeed a peak is in. And first, before I get to that, one of the things that the bears have been looking at is they're calling this decline, rather than an ABC, they're calling it a 1-2. I have some problems with that. Here's a very popular counting this as 5 waves down to 1 on the May low, and then from there, a convoluted flat or zigzag or whatever back up. Several issues. First, the decline labeled X, I think best counts as an impulse wave. It doesn't count really well as a portion of this corrective pattern. I think that's the first red flag for this pattern. The other issue, and this is fairly obvious when you look at it, the first ABC up in terms of time is far shorter than the second ABC. Indeed, about 2.62 in terms of time, 262% comes in near the late August lows, and interestingly enough, 423% or 4.236 times the first rally in terms of time comes in on October 6th. I do find that interesting because that October 5th was our initial time target for this ABC rally to end. So that is worth noting. That said, this is an extraordinarily imbalanced, non-proportional pattern in terms of the popular count, where you have one ABC up and the second ABC more than 400% as long as the first ABC. So is it possible? Yes, it's possible, but I think it's highly unlikely that you would have a wave 2 that's so much longer than wave 1, and that the second portion of the wave 2, which should be proportional to the first portion, is not. It's just way out of whack. So, decide for yourself, but I think it's a stretch to call this a 1, 2. Now, the other scenario is that folks are counting this entire decline as a 1 down. Well, the problem with that is that if you count it out, and I've labeled it here 1, 2, 3, 4, 5, 6, 7, well, 7 waves down is a corrective pattern. And it doesn't count as a 1, it counts better as an A. And indeed, that is my count, that this entire decline is A, and a rally back up, rather than being a wave 2, is a B wave. So, we shall see. As a practical matter, short term, it really doesn't matter. Either way, I think that we're peaking. So, whether or not we've peaked yet or not, we shall see. And here, indeed, is the short-term picture on the S&P 500 cash. And as you can see here, we can count this as a contracting pattern. We did make a new high, which I had counted yesterday as wave 5, and that certainly still could be the possibility. If we start breaking down below 1132, or better yet 1130, then perhaps this is just a consolidation off of the top, and that indeed yesterday's peak at just above 1157 is indeed the top. So we shall see. The other thing is that this is the advanced decline line on the NASDAQ. You can see that it's contracting as well. And the implication of all this is that although we may have topped, we may also be in a small wave 4. There may be one last spike. It may take us to a peak on our ideal target date of October 5th, or perhaps October 6th next week. But that said, my long-term picture scenario here that I'm looking at is bearish, so let's watch for that. And here is the spiders, same basic pattern there. And I won't get into it in depth, but bottom line is breadth is contracting. It's not really confirming the decline. Price is contracting. That's not inconsistent with, again, a small fourth wave pattern. The implication, obviously, of a fourth wave pattern is there's one more new high to come. So let's watch for that. And if you're short, I would tend to be defensive here. I do think that, again, the possibility is that the top is in, and the next big move is likely down. That said, we could pop up one more time, October 5th or 6th being the ideal targets for a secondary peak. Anyway, thanks for watching. If I don't talk to you again, have a great weekend. Bye-bye.